Today, eToro plans to remove some crypto tokens from its trading platform for U.S. customers as part of a settlement with the SEC. The CFTC partners with other agencies to warn against a romance crypto scam, which is gaining traction. And Kraken's Tomas Perfumo weighs in on what's driving crypto prices right now. Welcome to CNBC's Crypto World. I'm Lindsay Jacobson. Bitcoin in the green this morning, jumping above $58,000 around 10:30, influenced by a rally in U.S. tech stocks. As of around noon Eastern, Bitcoin dropped to the $57,000 level, but was still about 1.5% higher than the 24 hours before. Ether traded flat, and Ripple's XRP token jumped more than 5.5% after Grayscale announced the launch of a new trust that gives accredited investors direct exposure to the cryptocurrency. According to Standard Chartered, Bitcoin is likely to reach at least one more all-time high by the end of the year, regardless of who wins the election in November. That's a contrast from other financial institutions like Bernstein, who view the election as make or break for the crypto industry, given the candidates' differing positions on crypto. In recent months, former President Donald Trump has taken a pro-crypto platform, while Vice President Kamala Harris has yet to declare her views on digital assets publicly. In a note today, Standard Chartered's Jeff Kendrick said while each outcome would certainly have different impacts on the crypto industry, the risks of a Harris presidency may be exaggerated. He argues Bitcoin as an investment should continue to do well regardless of who's in office. He forecasted that Bitcoin will end 2024 at the $125,000 level if Trump wins, or $75,000 if Harris wins, which would both surpass Bitcoin's current all-time high above $73,000 reached back in March. Okay, let's talk about the top stories. Trading platform eToro reached a $1.5 million settlement with the SEC. As part of the settlement announced this morning, eToro will end trading activity for most assets for U.S. customers. eToro says this limits U.S. offerings to just Bitcoin, Bitcoin Cash, and Ether. Customers can no longer buy tokens outside of these three and have until March to close positions no longer supported by the platform before they get liquidated. The trading platform also said it would consider offering other crypto assets in the future that meet a regulatory framework, expressing optimism for regulatory clarity in the U.S. in the near future. eToro was facing charges tied to its crypto business, with the SEC alleging the platform operated an unregistered broker and clearing agency. Next, the CFTC is stepping up its fight against a romance crypto scam known as pig butchering. Yesterday, the CFTC's Office of Customer Outreach and Education announced partnerships with the American Bankers Association Foundation and other federal agencies, including the SEC. The goal, to educate people in an effort to prevent them from falling victim to these investment scams. Pig butchering, of course, got its name from how scammers fatten up their victims through flattery in an effort to gain trust. The group released this information, outlining the scam's different phases and what people should look out for, noting that scammers typically target people through texts, dating sites, and professional networking platforms, to name a few. They also offered tips on how people can protect themselves, including recognizing that video chats and online trading platforms that appear legitimate can be fake. The latest mid-year crime update from Chainalysis shows that pig butchering is the largest revenue-generating crypto scam type so far this year. And the FBI's Internet Crime Complaint Center found losses tied to crypto-related investment scams, including pig butchering, accounted for the vast majority of the roughly $4.5 billion in funds stolen in all investment scams last year, totaling just under $4 billion. All right, back to markets for our main story. Crypto World's Tanea Mikhail spoke with Tomas Perfumo, Kraken's head of strategy, about the state of Bitcoin right now and how much sway the outcome of the U.S. presidential election could have on prices.
All right, Tomas, it's so great to see you. Thank you so much for joining us again today. It kind of feels like not that much has changed on the surface in the crypto market since the last time we spoke. We're midway almost through September, so we're dealing with some seasonality, but Bitcoin's still pretty stuck in the same range that it's been stuck in this year. And without a clear catalyst, pretty correlated to stocks right now. And of course, everybody focusing on the election. What do you make of things so far this month?
Yeah, I think when we discussed last time, really the near-term catalysts haven't really changed. It's going to be things like the macroeconomic environment. And of course, this September meeting for the Fed is the spotlight in terms of what we're going to see going forward. When it comes to other catalysts, the US election is a big one that's not coming for another couple months here. And then thirdly, just growth, ongoing growth in the exchange traded product side, where we've seen a little bit of bumps since July in terms of total cumulative net inflows into the products, but they're still very strong. And so I think those three haven't really changed too dramatically, but in the coming weeks and months is where you're going to see some price action.
Let's get into the election as a catalyst, because, since the dust is still kind of settling on the debate the other night, it seems to me like there's been a little bit of a shift here. Trump came out earlier this summer and made these kind of big pro-crypto overtures, and the market really hit a wave there. I got very excited about it. And it seems like since then, from a sentiment perspective, the sentiment has become a little bit more partisan in crypto for a group that is constantly saying that it's a nonpartisan industry. What do you like? Where are we with the election as a catalyst? We've seen Wall Street with some interesting calls lately, kind of showing this huge difference. If Trump wins, there's going to be a huge rally. If Harris wins, there's going to be a huge pullback. What do you make of this? And do you think that we are still in that same place now with Kamala Harris as the candidate versus when the issue was a potential second Biden presidency?
Sure. So I personally think that crypto remains a bipartisan issue. And what we've seen is, of course, with all the commotion, what I think is a little bit of a loud minority of people who are really campaigning on this idea that one candidate is going to be much better than the other. The reality is, when you think about demographics, this election and elections going forward, it continues to skew towards that younger generation that has a very positive outlook on crypto. And so this is no longer an issue like you saw in prior elections that you can just ignore and get away with it. So we're going to see crypto continuing to be a proactive discussion point in elections going forward. And from my perspective, what's exciting about this election in particular is that crypto is a loud issue. It's something that's being discussed in the agenda of these different candidates. But importantly, the solution here is, again, going to be legislative clarity. And we've already seen a lot of green shoots over the course of this year that we might get that in the US. And you've even seen comments from both sides as recently as August at the idea that, or the prospect that we might actually see legislation passed by end of year. And so I personally think when you think about crypto as an issue, it's still a very bipartisan issue. A lot of people around the country in a bipartisan way own crypto. And ultimately speaking, in the medium term, I think crypto wins. It's just a technology on fundamentals around money and whatnot, not a political statement.
So what about the rest of the crypto industry? It seems like there is a little bit of disillusionment in the space, kind of like the success of the Bitcoin ETFs have been isolated. Bitcoin, it's been stagnant, or rather it's been drifting in this tight range, but it's still holding on to a pretty solid year-to-date gain. The rest of the crypto market is not really looking the same. And, I talk to people a lot about how we're just not seeing very obvious use cases for the technology start to emerge like we have seen in previous bull cycles. And we're not seeing that sort of everything rally follow Ethereum, which follows Bitcoin after Bitcoin hit its all-time high this year. So what do you make of that?
Yeah, I personally think, the market cycles play out very differently. So we've always historically had this kind of market cycle built on the Bitcoin halving. And then we have add-ons to that fire up perhaps a new market cycle. So in the past, we had DeFi summer, for example, and then the explosion of NFTs. And that tends to rise all boats in this tide. And so when I think about the current market cycle, you're right, it is very Bitcoin dominant. And we haven't seen that kind of dark horse play out in Ethereum, in Solana, and other networks that really brings that kind of peak momentum we've seen in the past. However, when it comes to Bitcoin, one way to think about it, we are still about 20% below the all-time highs set in March. And nevertheless, since then, we've had $6 billion of new net inflows coming into the ETF. And so there is still momentum to be had when it comes to the ETFs themselves in terms of bringing in capital and flow into this industry. For example, You have ETFs launching in the UK, in Hong Kong. Only recently, in the last month and a half or so, some of the biggest wealth managers like Morgan Stanley and investment advisors are now just starting to get involved into this. So there's still room for growth in that respect. And then when it comes to these applications on other networks like Ethereum and whatnot, from my perspective, what's really interesting is that you've had this proliferation of layer 2 activity and whatnot that have really shrunk the cost of doing these kind of fast transactions, microtransactions, to the point where it enables a lot of new applications that you just couldn't perform in prior cycles. And so I'm also waiting for that kind of dark horse candidate that might come out. But nevertheless, I still think there's room to run with the Bitcoin cycle so far.
And what about the correlation with Bitcoin and Ether? If you look at the on-chain metrics for Ether, it's not looking good. I think a lot of investors are starting to question, if Ethereum is doing what it was supposed to do after the merge and after the Chapella upgrade. So it's definitely been lagging and underperforming. But do we just consider that correlated with Bitcoin and expect to see it kind of follow any significant price increases there? Or do you think that there's something on the more technical side that could sort of instigate some bigger movement and put some life back into ETH?
Sure. So correlations with Bitcoin and ETH is around 0.9. It's very high. And this is something that has been the case historically. You've typically seen positive correlation 0.8 to 0.9. What you tend to see is also some decoupling events. So you had the Bitcoin ETF, which causes a decoupling where Bitcoin vastly outperforms. So that was the rumors that we had last year, going into the end of last year. Of course, during the summer, you had ETH start to outperform on the rumors and the approval of the Ethereum ETF. And I would say more recently, there has been a recoupling. So we had a price correction in Ethereum, I think reflecting some disappointment in the progress so far in the Ethereum ETF. But again, it's still early days for them too. And we've reset back to that historically very strong positive correlation. What's been interesting is in terms of correlations that all of these crypto assets, so Bitcoin, Ethereum, for example, are becoming increasingly correlated with other risk assets like US equity indices. And that's really a reflection of the fact that the macroeconomic environment and central banking policy is dominating the conversation on price action, at least for now.
Okay, one last thing before we go. Former FTX executive Ryan Salem returned to court this morning after waffling on his guilty plea. He's due to start a 7.5-year prison sentence next month. We'll have updates on what happened in court today in tomorrow's show. That's all for Crypto World today. We look forward to seeing you tomorrow.